Hello there, Maverick Traders. This is Imri, and I'm here today with our currency recap. Okay, so a lot has happened since yesterday's Fed meeting. So the Fed hiked rates by 75 basis points as expected, and Powell had some strong words on what he said the Fed is prepared to do to fight inflation. And basically, he said getting price stability under control is more important than accommodating the market and the economy in the short term. So, that very negative reaction to those comments, as you might expect. And today, the market's kind of digesting the aftermath of yesterday's Fed meeting. We saw equity markets rally, then they got slammed back down. The dollar did soften a little bit, however, and the yen was particularly strong today off the back of BOJ, a Bank of Japan statement saying that they're going to be prepared to support the currency, which is historic. So looking at today's performance, first up, we have the S&P 500. So we're in a support level right now, and on a short-term basis, the market is quite oversold. I'll give you that. So I wouldn't be surprised if we got a little bit of a bounce in overnight action. But I do ultimately expect this support level to give way, and I think we're going to be pressuring the June lows from the start of the rally, of the summer rally. And I think we're eventually going to take out those June lows, and I think we have one more bottom to put in after that, and then I'll be looking for the entire bear market to gradually bottom out. I don't think we're going to have like a V-shaped recovery, but anyway, I don't want to get too far ahead of myself. We're bouncing in support right now, but I think this bounce is going to get sold. That's the bottom line. Now, over in the world total world stock index, you can see we've actually already made a new lower low. And similar to the S&Ps, the VT is oversold on short-term technical indicators. So again, I wouldn't be surprised to see a little bit of a bounce here, but just like with the S&P, I do expect that bounce to ultimately get sold and make way for fresh lows. Over in crypto, in percentage terms, crypto looked exciting to the upside today. But if you see this, I mean, this just looks like a textbook low base here. I do believe we're going to break down to fresh new lows in crypto as well. In the short term, we might trade in between those moving averages, find some resistance, and then roll over again. Okay, so we're going to stick with a -2 reading on the market here. I mean, this just does not look all that good in the intermediate term. Short term, like I said, the potential for a bounce is still there. And in terms of tomorrow, we've got a bunch of data coming out of Europe. So for those of us on the Eastern time zone, Central time zones, as we start our trading days tomorrow, we're going to see how the market's priced in that data. And then we have also Flash Services PMI coming out of the US. That I don't know if that's going to be a significant market mover or not, to be honest. We'll have to wait and see what the actual number is. If it's wildly off the expected forecast, then there could be some fireworks. And then Jerome Powell will be speaking as well. I just don't think there's going to be anything new for him to add, however, in those comments. But you never know. Something could definitely always come out of left field. Now, in terms of currency analysis, like I said, on the surface, this looks like a great day for crypto, but I really still believe that this is nothing more than a bear market rally. And over on the fiat side of things, we can see that the Swiss franc was the biggest loser on the day. Pretty much everything else more or less flat. I wouldn't say we really saw a significant move in the currency baskets other than in the yen. I mean, the yen just had a stellar day today off the back of those BOJ comments. We're going to take a look at the yen dollar basket in just a moment, however. So hold on to your hats. We'll take a look. And we'll see whether this yen strength is for real or not. Now, in terms of velocity, I mean, the big velocity right now really seems to be in the yen. The Aussie, if we go by the rule book, would be a +2, but we'll take a look at that basket as well and see whether or not that rating is justified. I can come up with a reasonable argument both ways. So yeah, without any further ado, let's take a look at some possible trades. So first off, I've got the Aussie basket. Now, I've got this highlighted support area. My apologies. Let me just change the color there just so it's a little more easily visible. So you can see we've traded into the support area, spiked below it, and we've tried to rally, but there were sellers waiting a little bit higher, right in this region right here. So on a short-term basis, right, we do have a lot of energy. We're trading from those lows. For me to get interested in the Aussie, however, we have to get through this mess right here. Okay, if we can get through that mess, then I think that sets us up for a potential shot at trading a little bit higher towards that next area of resistance, and then finally to the long-standing top of that range. Now, we haven't tested that range since August, right? So the range was first established in May. We tried it again in June, then again in August. So it could take quite a few days, if not a few weeks, in order for us to get back to the upper end of that range. If we can't break through this first initial resistance zone here, then my feeling is we're going to break below the support and test support going back to July and May. All right, so I have a feeling we're still going to be in a range-bound mode in the Aussie, but the parameters of that range, both higher and lower, might shift over the next couple days. The pound, I mentioned this support area before, broke below it. We're about to start testing some, we're going to be testing some historic levels in the pound. I think being short the pound is a great play. It just makes a lot of sense, both on a macro level and on a technical level. So I'm looking at testing the lows from August 2019, August 2017 as well, and then March 2017. So there's a lot of support coming in here. We're going to take a look and see if we can crack that or not, but I do expect us to trade into that zone on this index. Okay, so the yen. This is one you've all been waiting for, I hope. All right, so we've got what old school technical analysts would call a falling wedge, which is typically a reversal pattern. I've got some momentum indicators here, and the relative strength index is showing some nice bullish divergence. I'm seeing some nice bullish divergence in the MACD as well. So, I mean, it's too early to say whether this is going to break out or not. It's very possible we just tag the upper boundary line of this wedge here and then fall lower again. The yen has not really held up as a safe haven currency so far in 2022. So I don't think that's not why people were buying the yen today. So we'll have to see how much credibility, the BOJ, the Bank of Japan, has kind of established here with the market based off of its comments. So it could be that this is just a knee-jerk reaction. The yen's going to roll over again. I am not going to touch the yen until I'd like to see the yen trade a little bit higher, and let's see if we can break through the resistance line of this wedge or not. But yeah, I like to look for trades around key zones and look at where that trend line comes in. It also comes in with a bunch of tops from June, July, and August. So there's a lot of stuff all coming in around the same area in the yen basket. I'd like to look for either a bullish continuation pattern or a bearish reversal pattern as we trade a little bit higher. The Kiwi broke in support, and I think we're headed for this area of supply, on the price chart going back to lows that we haven't seen since April, May of 2020. So I think the short Kiwi trade is still going to be in effect. Yes, there is a little bit of support here, but my expectation is that we're going to take that out on the next run lower. And the final basket I want to take a look at is the dollar. So we did break through, as I was calling a couple of weeks ago, in the dollar. The big test now is the spike high from March of 2020, which is the COVID high. Let's see if we can take that out. I suspect that we will, and that might complete an intermediate cycle in the dollar, which would then see a period of dollar weakness as we trade back into prior broken resistance, which the market might now treat as support. So I do think we still have some dollar strength left before we see a larger setback in the US dollar. That's it for possible trades, folks. So in conclusion, I think the potential for whipsaws is quite high. There could be some overnight volatility with all the data coming out of Europe. Keep position sizing tight, all right? This is, like I said, it's a higher volatility market. The moves can be deceptively big right? Like it might not visually look like it on a price chart, but we've covered ground in terms of pips, quite a lot of ground, right? So just make sure you're keeping your position sizing tight. Wait for your setups. This is what I love about high vol markets. If you miss a trade, there's going to be another opportunity right around the corner. Do not chase the market. If you miss the trade, you miss the trade. Do not chase. I promise you there will be another opportunity, especially with volatility being this high, right? So it's not do or die right now. Just because you miss a trade doesn't mean you're going to be sitting on your hands for the rest of the year. All right. Thanks, everyone. That's it for me. I'll see you guys next week.